What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is December 8th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to give you guys my textbook guide on how to win out big during a potential altcoin cycle. I know a lot of people are feeling a lot of FOMO and excitement around the recent price action in both Bitcoin and altcoins, but irrespective of where you stand on the market, whether you think Bitcoin is heading higher here or it's topping out in the near term, irrespective, I want to make it clear that we are not in an altcoin cycle just yet. The optimism we've seen is a great starting point, but I want to talk today about the signs we need to see to confirm an altcoin cycle, to talk about how we actually can approach and trade altcoin cycles, and last but not least, how to apply proper risk-reward management in our trade setups so that we can end up winning big against the performance of Bitcoin, making multiples upon multiples against the returns of Bitcoin in any given bull market or uptrend. We've got a lot to talk about here in today's video, so if you happen to like it, consider dropping a like, and let's go ahead and kick things off. Now, I want to start here by clarifying why I stand strong in that sense. It doesn't matter if you're bullish or bearish. We believe Bitcoin might be potentially topping out going into the ETF launch in early January. Some people believe that we're going to new all-time highs beyond 69,000, and we're going to go to 100K or 200K or some obscure number. Irrespective of where you stand, I stand strong in the belief that we are not in an altcoin cycle, and I'm going to spend some time with the charts and data to explain why. The first thing we need to understand here is that Bitcoin itself has not even broken above its prior all-time highs. I think that alone is probably a point of relative skepticism to whether or not we're going to be able to see altcoins really make a huge seismic move, because it tends to be that Bitcoin needs to break above new all-time highs and kick off a full-scale bull market. But irrespective of that point, it's important to note that Total 3 has just barely, here in the month of December, moved a couple percentage points above its multi-month or year-long resistance back towards August of 2022. And we saw back during that period of time that by the close of the month, those gains had been faded. So if we are at the cusp of an altcoin cycle here, it's important to understand that you're not late to the party. It would be like going back here in the last cycle when we set in the highest monthly close here in July of 2020, and believing that you were late to the party when in reality almost a near 1,200% move followed from that period of time. So don't let anyone tell you that you're completely behind on the trend. And I'm not saying it's going to make this kind of move, but I think that you could easily see, if we are going back up to all-time highs, we've got a 200% move here, roughly speaking, that we still have in play for Total 3, and potentially even higher levels if that bull market thesis that so many people are preaching is really in play. So this is the important thing to keep in mind here. But outside of that as well, Bitcoin dominance has been on the rise. So again, an altcoin season is identified by Bitcoin losing significant dominance, altcoins thereby consuming more market dominance and taking more market share, and having many plays that are 5xing against Bitcoin, 10xing against Bitcoin from bottom to top. We have not seen that yet here. We've seen some plays in the market that are established that have made 2, 3, 4, and maybe some 5x's. But really, there are a few isolated plays in the market. We should be seeing an overwhelming amount of the crypto market outpacing Bitcoin at a minimum of a 2 to 3x multiple. So that's the kind of stuff we see during an altcoin cycle. However, we may very well be in the early setup stages of that altcoin cycle where a lot of those returns can be made. The first thing I want to note here is that if we take a look here at Bitcoin dominance, we're not only above the 200-week moving average, which is pretty much where altcoins started to top out in their dominance, Bitcoin started to top out in its dominance back in December 2020. When altcoins started to really have their breakthrough here. That to me is a sign that we're starting to get maybe a little bit overextended. And while we haven't come up here towards the descending line of resistance that takes that point from December 2020, and also the descending lines of lower highs here back in 2016, at the same time we may not go all the way up there, and we started to see that there has been more hesitation in the trend for Bitcoin dominance, signaling confidence for the more risk-on mentality of altcoins. And this tends to happen as Bitcoin grows in its price. As Bitcoin hits a higher premium, people take profits and they recycle those into more risk-on plays, hoping to win big again, right? So they're constantly rolling into new plays here and looking for those next altcoins that can multiply their returns even further. Now, I don't know when that top is going to be, but the big thing I'll let you guys know about is a little important secret here. The first major sign we want to see is a solid 3 to 5% red week in Bitcoin dominance decline. What do I mean by that? Take a look back here throughout history, guys. You'd be foolish to fight against the trend here. We at a minimum want to see a significant big move in Bitcoin dominance to the downside. The reason for this is it's indicative of a significant trend shift. We don't care about trying to pick the absolute bottom in altcoins against Bitcoin. What we care about here is knowing that the trend is confident and it's on our side, and that it's time to get on the rocket ship. That's the analogy I like to use here, guys. We want to know that the trend is on our side, that we've got a ton of other capital, a ton of other traders and speculators that have yet to come, that are going to start coming in behind us. And we're going to have the ability to essentially get in at a relatively early stage and make sure we are confident enough to know when we take profits and get out of the market and make some sizable returns, because most altcoins long term will not hold out against Bitcoin. So that's an important dynamic to understand here. The first thing we need to understand is that we need a significant break of Bitcoin dominance. And yet, so far, we haven't seen that. We've seen some fades here, right? We've seen some wicks here on the weekly time frame. This is definitely potentially maybe a start to it, but again, it's not a confirmation yet. A break below that 200 week would be a phenomenal sign, but again, you don't have to wait around just for that. Just wait at a minimum for a good solid 3 to 5% downward move here on a weekly basis as your first cue. The second thing here as well is we want to be able to hold back above total 3 here. Unlike back in August and prior months of the past around this $400 billion range, we faded every single time. A monthly close here, or at least a couple weekly closes above this range more than the simple break that we've had here, would be a great sign. I love seeing that we're above the 200-week moving average. These are all the right signs here in price. They're starting to signal more confidence that we could be hitting that altcoin cycle. But now that we've kind of talked about some of the key things we want to look for here, we want to look for a significant drop in dominance. We want to see that we're holding above these 200-week moving averages and actually able to have weekly or monthly closes, not daily or hourly closes, above those prior ranges of resistance, signaling that there is confidence we're not facing the same kind of distribution or sell side pressure of the past. Now we can focus on here towards talking about how we actually pick our plays. You know, a lot of people make the same time-repeated mistakes when it comes to altcoin cycles. They buy plays that they're familiar with, plays that they owned in prior cycles and did well with. They buy into narratives that simply aren't the focal point of a potential uptrend or bull market. And outside of that as well, at the end of the day, they aren't focused on what really matters here. A strong narrative, the leading narrative in the market, and strong price action, which tend to go hand in hand. Now, I'll go ahead and demonstrate this here. A lot of people, again, are feeling a lot of FOMO in the market right now, but if you take a look over the last 7 days, the overwhelming majority of altcoins here are likely below 10% in the green, and many are still actually in the red here for the last 7 days. Some of them also quite neutral, not making any returns and getting outpaced by Bitcoin. Well, what are we seeing here at the top? Well, if you've been following the channel here for the last week or two, you all know that we've been signifying big time that Bitcoin-related infrastructure is going to be the narrative. And what do you know? One of the biggest plays here outside of Bonk, which is a meme coin, which again, we're going to talk about that here in a couple moments. The important thing here that we've seen is that Ordi, or Ordinals, is one of the leading ordinal tokens, is up 132% just over the last 7 days. We talked about it back on the channel. We said that even though ordinals, which had already gone up from around $3 to around the mid-20 range, we said to look for a pullback on this play around the range that would be healthy, around a 33% plus pullback. And what do you know? It continued upwards towards around 60 bucks. Now, a lot of people would again say, hey, well, it's already run up so much. I don't know if I can buy that. But this is the big mistake that people make. They ignore the fact that ordinals in this case is only at $1 billion market cap. And along with that as well, they ignore the fact that confident market leaders of the previous weeks in a bull market or an overall move in altcoins tend to continue outperforming their peers. It is not about chasing something that is down 95%. We want to find something that has already gone up 3 or 5x here over the past few weeks, because those that continue to lead the leaderboard here for performance on a 7-day time frame, over a 30-day time frame, or 60-day or 90-day time frame, right? Those are the plays that continue to usually keep out on top. And until they stop keeping up on top, we're interested in them, especially those that are less than $1 billion market cap here. and are much smaller in comparison to, say, the large or mid-cap altcoins out there in the market that are already pretty well established and rank above that current play. We also said that for Stacks as well, which is just a $1.4 billion cryptocurrency, up 40% here in this week. And you can see there aren't many plays out there that are at the same kind of caliber of performance. So we need to have solidified, confident narratives. We understand why the Bitcoin infrastructure narrative is sexy. It's because Bitcoin is the focal point here in this cycle, and it's stealing a lot of market share and a lot of attention from Ethereum, from Solana, from Cardano, many other plays in the market, or at least it has been going into this announcement of an ETF potentially launching in January. Not many plays hold up there against it. So that's a big reason why we've been talking a lot about buying the dip on some of these stronger plays. Now, ordinals, again, I even actually misspoke earlier, went up to $70 here, right? I want to talk about how you can trade these market leaders here, because if we're not just trying to pick deadweight projects, we need to restructure our mindset towards how do we actually find good dip buying opportunities on plays that have already made serious run-ups but could continue to potentially make bigger moves here over the next couple of months. Well, I'll use Ordi as an example. While you guys do not have to copy this exactly, I want to talk about how I generally trade for the last couple of years a lot of big momentum plays, not just in altcoins, but also in traditional equities. One way you can trade momentum plays like this that just continue to make multiples after multiples, they have healthy corrections, they continue higher, it's relatively simple. You can see here with Ordi here in this case, we're starting to see some chop, some distribution, some resistance, which may indicate, like back here, that it's starting to slow down, that it needs to pause for a little while and build a new foundation before potentially running higher into triple-digit territory from its current price at $50. So what we're looking for here is another 33% plus correction, similar to the pullbacks it's had here from a lower relative high, somewhere into the 21-day pocket. Now, the 21-day pocket is a combination between the 21-day simple moving average and the 21-day EMA, or exponential moving average. Simply put, these two moving averages are calculating the last 21 daily closes amongst the price for Ordi. And what's great about this is it's giving us a potential range where we can start to look for buyers. Now, I have a really interesting thing to share with you guys here. Like, again, if you take a look here at the chart, right, I don't make the rules here, but you can see that the 21-day range here, basically the 3-week average, is exactly where Ordi started to get buyers. That's where ordinals started to get some buyers coming into the market on a discount from around a $27 relative high down here towards around $19. And that was exactly where for a week it accumulated to the side and started to break out here towards around $67. I gotta tell you guys, a lot of people would have said, whoa, Nick, I mean, I can't go long ordinals. It's still $20 and it was $3 back here. Well, if you actually took the trade there and started to buy into ordinals on that discount, you still heavily outpaced the overwhelming majority of altcoins, as well as Bitcoin. You would have made more than buying Bitcoin at the absolute bottom back in November 2022 and selling it at current prices. So this is why we need to, again, look for repeatable patterns here. We need to look for market leaders and plays that are at a nice market cap range, like Ordi, that are just at $1 billion in market cap. They can continue to make multiples. I want to go ahead and talk about another topic here. Another thing that can help us to signify altcoin cycles that I didn't really hit on earlier, but I think is important to discuss, and it also can be a trade setup if you're looking to purely speculate, is meme coins. Now, you heard me bring up Bonk earlier here, but I'm going to be using something that gives us a little bit more price history. And I'm going to be taking a look at Doge predominantly. Now, again, I want to emphasize before we dive into the charts, guys, I'm not here to tell you you should go out and buy Dogecoin. I'm not here to promote meme coins. And to be completely frank with you guys from a fundamental perspective, I dislike that meme coins are like the center stage of crypto to a large extent, that they're one of the few major narratives or things that people get really excited about. But hey, you know, you and I may feel that way. Some of you may differ and disagree. Either way, it is a clear repeated pattern here in crypto. There is no denying that. And if you are here to make money trading, which I think a lot of people are, we need to accept that reality, that these coins are out there. And they give us some of the best indicative signs of risk-on mentality, because there is really no fundamental value back in these things. It's just purely the fact that people are paying a higher price here. and speculating over time, and that momentum and FOMO is coming in. Well, as we can see here, again, a lot of people might say that we're in an altcoin cycle. Dogecoin, one of the leading historic momentum plays that makes thousands upon thousands of percentages in return, multiplying money from its absolute lows to the top, right? Constantly being a market leader here in practically all altcoin cycles, has not even gotten above its 200 week. So this is an imperative sign here. We got to see these plays getting above their big moving averages. We saw that here in Dogecoin in May of 2015 as it started to spend more time above the 200-day. That gave us the cues for a much larger move, 2 seismic moves into 2017. And outside of that, we needed to get back above the 200 week and make it support before we kicked off the move in 2020 and 2021. This is why, again, I indicate here, guys, that while I'm not saying Dogecoin has to be the biggest market leader or that it's going to repeat what it has done in the past, at a minimum, it's giving us a sign here that, like, we're still accumulating sideways for the most part. Yeah, sure, we're on the upper band, right? We're not at the lows here at 5 cents, but we're less than a 100% move from those lows. And I know that sounds like a lot, but Dogecoin makes thousands of percentage moves. 57,842% from bottom to top in the last cycle. 22,231% back in the prior cycle, right? So I'm not feeling like I missed out here, right, on these plays. And you shouldn't either, guys. Even if you're in on the market right now, hey, great to you for the returns you made. But we need to see these plays at a minimum being able to close and hold above their 200 week. Take a look back here in October 2022. Great example of this. Had a over near 120, 130% move from the top wick here. Unfortunately, next month in November, early part of the month, we faded that move. And we just couldn't actually confidently hold when we retested that 200 week. That's what we want to look for, guys. That's our entry point. That's the point when you know, hey, it's time to get your ticket and ride the rocket ship. It's time to get on board, time to put aside our feelings on what we thought about the market and get going. And I'm happy to admit here, guys, that again, while we've been more kind of pessimistic here, it's why we haven't chased Bitcoin in this cycle. Because I'm not here to have some vendetta against Bitcoin or crypto. I just need to know that the setup is there. And the setup is going to be in altcoins if we're really looking to make exponential returns here in these plays. But again, I bring it back here to the ratios, right? Dollar terms, we can't even get above the 200 week on Doge, but take a look here at BTC. We're still well below the 200 week here. And outside of that, we're not making any gains here, like 5% for the last 2 weeks, right? So Dogecoin is barely outpacing Bitcoin here. This is not the kind of exponential, 100, 200, 300% move that we can expect within a week or 2 weeks or a month against Bitcoin, right? So we, again, need to be cautious here. Now, the good news is that price on some of these is looking quite nice. We've got what may be a double bottom here between June of 2023 and November 2023 at prior resistance in the past. It could be a new base foundation for Dogecoin. We've had a very similar top to bottom correction from what we had back in January 2018 to December of 2020. This to me looks like the foundational setup for an altcoin cycle, not a confirmation one. We are getting all the right signs here that something big could be coming around the corner here. And we're interested in that. That's the kind of things we want to see. I don't know, to be completely frank with you guys, where the liquidity is going to come from. That's where my skepticism is. But again, at least we have a good risk reward setup here, right? So again, these plays, right, you can see throughout history, either waiting for a significant break above the 200-day, the blue line on our chart, or even the 200-week, and you're not going to be late, right? That's when you know the momentum's in and you can enjoy the ride. So wait for some breaks on those 200 days. Wait for breaks on those 200 weeks. Same here as well with like Pepe, right? Pepe at a minimum, it has a shorter period of trade history here. At least it's above that 200-day. Now what I want to see is when it pulls back, I only want it coming down to its 21-day EMA, right? That's the same kind of thing I look for here in Doge as well if we get towards those shorter term time frames and go back through history. Take a look back here as well about how price doesn't even come back to the 200-day. It holds around that 21-day moving average. At that point, once it hits the 200-day, it starts to go sideways, exactly as it did back here, right? Back here as well, right? Dip bought here exactly in April 2021, back here in May, right? The 21-day is your new friend here when it comes to momentum on these plays, and it's a matter of whether or not price is going to be able to hold on that range as it goes above the more longer term moving averages like the 200-day and 200-week. So again, some juicy information you guys can use there when trading. A great example here would be the Pepe BTC ratio. While in the 200-day here, it's up in dollar terms, it cannot so far get above the 200-day moving average. So let's wait and see if it does get above there, because if it does, then we've likely got some significant upside here for Pepe to continue climbing higher, where it can far outpace Bitcoin for this cycle. And last but not least here, guys, I want to go ahead and talk about rotation in altcoins. Now, if you've been here through a couple of cycles, you know that generally speaking, the way that funds flow here is that Bitcoin leads first. And then once Bitcoin makes returns, you tend to see it flow into the safest bet in the altcoin space, which is usually Ethereum, second largest cryptocurrency overall. And then it flows into the large caps, and then it flows into the small and mid caps, the risk on plays, those that may have relatively lacking fundamentals, but might have some interesting narratives or potential value creation opportunities, and outright may just be meme coins. This is another general rule to keep in mind here when it comes to altcoin cycles. But I have to tell you guys here that I don't think, as I mentioned earlier, that we are going to have a massive full-blown altcoin cycle where Bitcoin is reaching new all-time highs. And for that, we need to look beyond just buying in to Ethereum or buying into the large caps of the alt season here, essentially. What I mean here is applying and leaning much more in to those players in the market that are topping out the leaderboard, those that are constantly maintaining at the top ranks of the 7-day, 30-day percentage performance, right? This is a general rule of thumb here. And this is why, again, I'll talk a little bit about, we talked about meme coins earlier, right? But they may show up to the plate later on, right? So we need to talk a little bit about ETH, right? ETH here, for example, looks like it may be finding support in that green line of support. It might be a nice sizable deviation below the 200-week that can whipsaw higher here in the near term. We've got Cardano or ADA here, which has been rallying from around 860 sats here on the long-term line of support, getting above that 200-day moving average. Definitely a good sign. Might come up here towards the 200-week moving average. And outside of that as well, Solana, while personally for me, I think Solana is really overvalued going into the restructuring around FTX. I'd be very cautious about that. At the same time, it's holding here in its 21-day, right? I can't lie to you guys here. You see it in the chart, right? While it might dip a little bit below the 200-day, it's gotten back above, the 21-day EMA. You can generally see that there are some buyers coming in here. Plays like this are definitely of interest here, especially in these initial stages of what may be becoming an altcoin cycle. But bear in mind here that they may not be the play for the whole cycle, and they may not have the narrative to really continue outpacing the broader market. And all you got to do is track that performance. There are some plays in the large caps like XRP, which has not set a new all-time high against Bitcoin since back in May of 2017 or back here in January 2018. It has been bleeding. The 200-week keeps knocking it down when it comes to its BTC ratio. XRP may be up in dollar terms over the past couple weeks, but it keeps getting knocked down in BTC terms. You might as well just be exposed to Bitcoin. That's the point. And if you aren't outpacing Bitcoin, it's no bueno. It's not good. The other point here, again, we can take a look at BNB, right? Big utility token as well as protocol token for the Binance Smart Chain. Since back here in November 2022, just constant month by month bleeding here for the most part. And it snapped through its long-term line of support. Some of these plays may not hold up here. So you have to worry about when you're going towards these kind of broad overarching umbrella terms like the large caps or going into Ethereum and then trickling down to the small mid cap plays. Make sure you're buying into plays that are showing confidence. You don't just want to buy plays that are at a discount, because it may be that they continue to print a discount. I'll give just a great point here. All right, if the market has been moving up here quite steadily in October, November, and the early part of December, why is BNB continuing to bleed here? I think it's indicative of potential long-term trend shift, and Binance as an exchange of Binance Smart Chain, I think more than anything, it's a lot of the froth value that still needs to be given up here that BNB really didn't earn, because Binance Smart Chain has not added anything significantly new in the last year. There is not much development on the chain, and that's why, again, I mentioned that as well with some of the other large plays out there in the market. We mentioned Matic, for example, right? Matic is really still below its 200-week here. It had a nice little pop-up here in November, but again, faded those gains just as quick here. So I'm looking for plays that are leading forward, that are outpacing Bitcoin. I'm not afraid to pay a premium. And the reason I'm not afraid is because those plays that make premiums likely continue to make premiums until the party's over and you start to signify that it's time to take profits and get out. Now, I want to go ahead and talk about one of the most important dynamics here, guys, as we're going and talking about some of these plays here. We talked about, again, not buying into market laggards here and buying into market leaders. When it comes back here to ordinals, for example, as a trade setup, we need to talk about risk management. This is an important topic to close off on because when it comes to trading in altcoins, people don't set any degree of take profits, and it's difficult to set take profits. I understand where people are coming from because sometimes you can take profit and then, oh, it doubles again from the point you sold, and oh, I wish I would have held it, right? That's the question that everyone is constantly wondering about. At the end of the day, guys, we need to have reasonable take profit levels, things that, again, are not so exponential, that are within reason. And outside of that as well, we need to have a stop loss in place that is going to make sure we preserve and protect the majority of our capital if the trade goes the opposite way. So let's talk about that second point first, right? So when it comes to the second point, which is, I think, the more important one here, which is making sure that with a stop loss, we are not going to lose all of our money. What we do is we like to buy in to corrections on strong plays. So for example, with Ordi in this case, we're looking for this to zigzag into that 21-day EMA, start to build nice consolidations, signaling before we even considering a trade, by the way, that there is buyers at this range. There are buyers at this range. No one is selling as of yet. And there's possibly a good chance we can whipsaw higher and continue to new highs. That's the first indication here that we might want to potentially build a position. However, from that entry point in that channel, you want to set a nice, healthy stop loss that gives you the range where there might be a bit more volatility, right? So you don't want to get stop hunted. You don't want to get knocked out of your position. So you can still hopefully ride the wave, but at the same time, you're going to make sure that, hey, if things are really heading south, you're not going to lose everything. And the reason why I highlight this range here is because if, for example, the 200-day was in this range, I've probably drawn it a little bit lower. But let's say, for example, our entry was here at $33. We've got to set a decent range here where we could potentially lose some money. And the reason why is because if you set your stop too tight, you'll get knocked out. And you're going to miss the run-up if it actually kicks off. And outside of that as well, you don't want to be holding an empty bag here, so you have to know where to cut your losses. If Ordi, for example, if we just step out here the daily time frame, if ordinals drops as low as, say, 33% here, this is likely a sign that the trend is done with, right? That this is no longer going to be a market leader. And you're already buying it at a discount here, which is more indicative here. If you're hitting your stop or getting to that range, it's time to pack up shop and get out. Now, I'm not saying here that that's likely for it to happen. We don't know. It's been showing a lot of signs of confidence here in its play. But the key point I'm saying here is that you should have a wide stop loss. You'll know whatever level is good for you. It can vary by the play. I would say somewhere in the ballpark of 20 to 33%. Somewhere where you can strike somewhere in the middle there is going to make sure that you're not going to lose too much money, but at the same time as well, you're going to give your plays that are market leaders that have proven themselves over the past couple weeks and months and potentially over a year, the signified confidence that, hey, I'm going to give you the room to be a bit volatile, but continue surging higher, and to allow for buyers to come in, provide that bid side support, and the market order flow to really lead it higher. That's the name of the game here with trades, guys, with momentum plays. I have traded so many momentum plays back throughout the years when it comes to crypto, and that is, for me, one of the textbook guides here, looking for that confidence with the moving averages, not coming close to that 200-day during these upward swings, because the momentum is here, it's in the near term, and the buyers are signaling a confidence here. Again, it looks like we've got some short-term distribution here, but for the time being, we want to essentially talk about how we can find those next entrants. Now, the last thing here about risk management is take profits. How do you set reasonable take profits in a world where valuations are out the wazoo? They don't make sense. Ordi, for example, ordinals, doesn't make any money, right? Like, how do you actually establish healthy take profits? It's all about setting more reasonable, more conservative expectations than other people. There is no set rule that you can follow, but there is one way I like to kind of approach take profits. whatever my stop loss is, right? For example, if my stop loss for my entry, let's say around maybe 33 bucks, right? We'll go ahead and actually use, this is a tool that a lot of people don't know about when it comes to TradingView, but you can set long or short positions. So from here, let's say my entrance is going to be around 33 bucks. I can go ahead and pop it here on the chart, and I can adapt my target range here for take profit as well as my stop. Now I'm going to go ahead and get that here towards a nice healthy 33%, right? So if we come down here towards around, for example, 22 bucks, in that case, I'm pretty confident that Ordi is no longer going to be a market leader, at least in the near term, and it's time for me to look elsewhere. Outside of that as well, for my take profit, I should make sure that I've got a healthy risk reward ratio. And I'm going to probably set this up towards a big even level, like around 100 bucks. Now, the big reason here, while I have this nice healthy risk reward ratio, I've got a 6 potential reward ratio against my risk. So I potentially could lose 33% of my position or whatever I put in there. I'd recommend you guys not go all in with your funds. Just want to make that clear. But let's say I've allocated 10, 15% of my crypto portfolio or my crypto account balance into Ordi. I know that I could lose 33% of that. Couple percentage points net overall, not the end of the world, but I also have this potential trade setup that can make me some sizable returns. Now, if you, for example, take the simple approach of just setting one take profit at $100, you're probably gonna have a bad day. I mean, if you're doing more short-term trade setups that have shorter risk-reward ratios, then maybe yes, you can do that. But if you are really going with these kind of exponential plays here, you do not want to have one particular number in mind where you sell everything. So a great way to think about this is if, for example, from our entry point, we decide to sell half at a 66% return, around say 55 bucks, we've essentially covered for what we could have potentially lost in the trade. And from there, what we can do is we can raise our stop loss here towards our entry point. And from there, we just let the other 50% ride. Essentially, if things come back here down to the bottom, hey, we at least still took half of our profits. We net overall in our big position made 33%. And outside of that, we're out of the trade. There's no more risk. We've walked away with profits. If things go our way, we took half at 66%, the other half at 200%. And from there, we walk away with a really sizable profit. Net overall, over 100% return. Like, that's great. More than 100% on our overall return on our position. That's the kind of stuff that can make you sizable returns in crypto. And that's just one trade setup of many that you can make within the crypto space here. Or you could possibly go to much higher levels. The only reason I set around $100 here is it's a big even level, and Ordinals is around $1 billion market cap. So at current terms, that would likely put it somewhere, if it's sitting around 40 bucks right now. And that's going to put us roughly, 50 bucks right now. That's roughly going to put us at a $2 billion market cap. Again, you may have higher terms of where you think these plays are going to go. You may think it's going to $3, $5 billion. Depends on your risk profile. I recommend keeping things modest here, guys. I recommend keeping things in check. Ordinals is definitely the leading play right now because it ties with the Bitcoin narrative, but there's not anything really fundamental with Ordinals right now. So like, again, the narrative is there, but again, it's all hype. It's driven and drummed up here because it's related to Bitcoin as one of the innovative technologies on top of it as a protocol, right? So this is my point here that at the end of the day, we take our profits, we keep things conservative, and hey, if it draws back down to that 21 day, confidence is still holding, we set in another favorable trade setup and we ride the wave again. We continue to watch as price discovery is playing out, but we make sure we're always keeping a mindset of taking our money off the table. We do not want to fall in love with our positions. We do not want to essentially get caught red-handed or in a game of musical chairs where we're holding the empty bag as valuations drop significantly. This is common in traditional trading in equities. It's the same as well in crypto. So I hope today I provided some good outlines here for you guys to approach the altcoin market, whether you're trading meme coins, whether you're trading Bitcoin infrastructure, or whether you're trading any other types of altcoins out there like L1 or L2 infrastructure like Ethereum or Cardano, etc. The big takeaways that we talked about here today is making sure to have the right signs for an altcoin cycle, not jumping into the boat too soon, waiting for the market to give you the right signs. Also leaning in here towards market leaders and how to properly trade them. and have proper risk management, and also leaning into meme coins as a sentiment gauge here for altcoin cycles. We covered a lot here in today's video, but one big thing that I want you guys to be aware of here is that if you're trading altcoins very frequently, if you're really trying to make sizable returns, it is imperative that you not only have a proper market strategy when it comes to like approaching trading in altcoins, but also make sure that you've got the right tax strategy. If you're in the United States, for example, it might vary globally speaking, but if you're in the US and you're trading from one crypto to another, it doesn't matter if you go back into stable coins or whatever, that's a taxable event. And if you're doing short-term trades, you're going to be coughing up, roughly speaking, around 25-30%, if not more, for your short-term trades. And that's why I want to spend some time to talk about our sponsor and long-term partner, iTrustCapital. iTrustCapital is a crypto IRA platform that allows you to open up an individual retirement account, or IRA, and allows you to not just long-term invest in crypto at a tax advantage, but also do short-term trading. You can trade practically any of the cryptocurrencies, a lot of the cryptos we talked about in today's video, from iTrustCapital. And from there, you can not only trade markets 24/7, but outside of that, you have the tax advantages of not having to pay any taxes at the end of the fiscal year in your trading balance. So every bit of profits you're making there, you get to keep in your account and keep growing, and only have to pay taxes at a much lower income bracket rate when you actually cash out your IRA into retirement. So this is a really great system here. It's a great way to plan for retirement, to have some of your crypto allocated to something like iTrustCapital. It could be a really smart and wise decision here as you're going into planning for retirement. So if you guys are interested, check out the link down below in the description, iTrustCapital. Again, you can always talk to a financial accountant or someone who helps guide you in your financial decisions. I'm not here to give you guys financial advice, but an IRA here is definitely going to give you the tax advantages when it comes to trading. There's no doubt about that. And you can access a whole range of cryptos on iTrustCapital that you simply wouldn't be able to access in other IRA providers. So check it out, the link down below in the description, guys. That's it for today's video. I hope you guys enjoyed it. One other thing I want to let you guys know about, if you're interested to kind of see what altcoins we're tracking in the market, if you want to join in on any potential trades that we're going to be making, you guys can check out the dash report down below in the description. It's our newsletter here on the channel. And again, we haven't been making too many big moves here in the market right now, but once we get those signs, once it's clear that that altcoin cycle is coming to play, you guys will hear it first in the dash report. We send out trade alerts, again, much less frequently than more active services, but when we really make those sizable trades in the market, we'll send those alerts out. We also have a mid-month webinar coming up here at the middle of the month where you guys can ask me questions, we can dive into the charts, and we also send exclusive market updates. We also have our dash report discussion group, a whole range of features. And on top of all that, we still have the same pricing we've had since 2018. You can get 20% off, or $240 for an annualized subscription, and $25 a month. And if you go ahead and sign up this year before the close of the year, we are going to grandfather those rates in, essentially, as we raise prices going into 2024. So if you guys want to sign up on that annualized basis, lock in that rate. It's for less than a cup of coffee a day, much less than a cup of Starbucks coffee for those of you who are crazy enough to drink Starbucks on a daily basis. Then I highly recommend you guys check out the dashboard down below in the description. It's not that much, and it's a great way to support all the free content we put out here on this channel. But I've rambled on a good amount here today, guys. I hope you all enjoyed this video. If you did, consider dropping a like, and I'll see you guys excuse me, I'll see you guys in the next video. Take care, everyone.